Today, I want to talk about the biggest AMC news yet. James O'Keefe, the guy that exposed Pfizer, is now moving on to expose the world's largest financial institution and expose financial crimes like MMTLP and AMC as well. So stay tuned and let's make some money. Now I'll dive straight in with the key information. So, James tweeted back in April saying a Freedom of Information Act request for MMTLP shows FINRA to SEC emails. He asks if there's fake or counterfeit shares with MMTLP, and what did FINRA and the SEC discuss or find prior to the U3 halt. He said at least 64,000 shareholders are in limbo, there's billions of dollars in losses, and this could be the biggest financial crime in US history. Now Marduk tweeted the other day saying coming tomorrow, June 20th, 2023, James O'Keefe launches the biggest OMG story yet into the most powerful institution. And he says, well, we know he's talking about Wall Street, but is he indeed referring to the MMTLP fiasco and the AMC crimes as well? Now, obviously today is June 20th and James has tweeted just a few hours ago saying breaking news. A BlackRock recruiter who decides people's fate spills info on the company's world impact. In the interview, he says things like if you've got $10,000, you can buy a US senator and have pretty much any ruling passed or any crimes overlooked. Now, obviously, I don't want to show this full 11-minute video from James O'Keefe, but I will leave it down in the description below. But I am very happy that James O'Keefe is now targeting BlackRock as his next investigation, because we know the crimes BlackRock commit are very similar, if not the exact same, to the crimes that Citadel commit too. All of these allegations of bribery is the exact same thing Citadel performs as well, as they knowingly send tons and tons of money direct to US senators and political candidates. We know that BlackRock owns tons of AMC shares and also works very closely with firms and market makers just like Citadel. And therefore it wouldn't surprise me if on the back of this investigation into BlackRock, James O'Keefe tries to focus further on Citadel themselves or on the actual crimes going on behind the scenes in companies like MMTLP, AMC, GameStop and many others. I am personally very excited to see how this story develops and what James O'Keefe releases next. Now, Frank has also tweeted saying according to data from S3 Partners Research, as of June 10th, short sellers have accumulated about $318 million in mark-to-market losses through 2023 on GameStop. And they've also said that GameStop looks like it may be set for another squeeze. According to S3 Partners, GameStop currently has a short squeeze score of 95%. Now, obviously, they may be trying to trick retail investors into buying call options and then pulling out the rug, so do be careful. But I did want to talk through this article in more detail. It says, while GameStop short sellers have lost $320 million this year so far, it's possible that a spike in the share price may trigger another short squeeze. It says as the broader stock market has been on a tear for about a month, things are looking grim for investors with big short positions in stocks like AMC Entertainment and GameStop and other large tech companies too. And one factor that is also killing profits for short sellers is the borrowing costs on stocks that no one is willing to part with. Obviously, because retail investors aren't selling AMC shares, which has been proved in those court documents, as there's still 3.8 million individual AMC investors that have only increased their shareholdings over the last 2 years. This shows these shorts are struggling more and more to borrow actual shares. And to do so, they're having to pay more and more exorbitant borrowing fees on top. And this obviously combines perfectly with the current short interest in mega cap tech stocks. We can see shorts have a current short position on Tesla of around $23 billion, around $22 billion in Apple, around $16 billion in Microsoft, around $11 or $12 billion in Nvidia, and around $9.5 billion in Amazon. And obviously, because these tech stocks have been tearing over the last 6 months in total, these shorts are down significantly on their short positions. We know on Nvidia they're down around $6 billion, on Tesla another $8 billion on top of that, and I'm sure between these other positions as well, it's likely another $5 or $10 billion on top of that. And not only are these shorts losing tens of billions of dollars on large cap tech stocks, but obviously they're also losing money on GameStop as well. And this is why shorts are currently having a terrible time, especially as they're now being exposed by James O'Keefe as well. And as a result of these shorts losing tons and tons of money, it's now even more difficult for them to raise external cash. I want to quickly read through this article or this headline and then explain exactly why that's a massive problem for companies like Citadel. This article says that Tiger Global is falling short of its $6 billion target for its new fund. The firm has only secured about $2 billion for its venture capital fund, as investors have had a lukewarm response to recent fundraisings. Now what this basically means, if the shorts need additional money, if they need to sell off a portion of their business, take on debt from elsewhere, or a capital infusion, it's currently significantly more difficult for them to do so, as investors have little interest. If Citadel needs to sell off another $1 billion of their equity, they're going to struggle to do so. If they want to take on another $2 billion in equity finance or in investment or in loans, they're also going to struggle to do so as well. And therefore, if Citadel gets close to its margin call position, they can't just rely on another hedge fund to invest money into them or buy a portion of their business. They're likely going to end up being margin called, because these investors just currently aren't interested in investing into hedge funds, and that's why Tiger Global is really struggling to meet its new fund targets. It's not like they've just missed out on a few $1 million from their full fund target requirement. They've literally only just about managed to raise 30% of what they needed. They needed $6 billion, they've only raised just about $2 billion, so that's an additional $4 billion they do not have and that nobody is interested in giving to them, which obviously places them $4 billion closer to that margin call position. And especially if the exact same thing happens to Citadel, we could see Citadel collapsing very quickly. And that's why InvestorPlace is trying to pump out more FUD AMC articles, because they're desperate for you to sell, because they know that hedge funds can't raise additional cash if they so need to. But Suspended POS is willing to lose his shirt, his shorts and his shoes because he knows that AMC will eventually squeeze. The article from InvestorPlace says 3 meme stocks to sell before you lose your shirt, your shorts and your shoes. It says despite the advent of the bull market, meme stock crashes are likely to remain very common in the coming months. And they say that Ryan Cohen buying shares of GameStop is bad news. They've also said that Coinbase and AMC are likely to crash significantly as well. Obviously, this is just typical FUD from InvestorPlace, which if anything shows we're even closer to a squeeze and shows that hedge funds are even more desperate. Especially as these hedge funds are now being exposed for trying to pay off senators or successfully paying off senators and paying off news outlets as well. Now, something else I also thought was very interesting to talk about is this tweet from Stocks Batman. He said if Adam Aaron was on Apollo's side, why didn't AMC file for bankruptcy in December of 2020? He said people to this day are still bringing up Apollo's link to Adam Aaron. This article says Apollo, which along with Canyon Capital Advisors and Davidson Kempner Capital Management are holders of AMC's first lien debt, and they're urging AMC to file for Chapter 11 bankruptcy and have even offered $1 billion in debtor in possession financing. I've actually made a video on this before where Adam Aaron effectively declined $1 billion in free cash for letting AMC go bankrupt. He'd rather aim for AMC not to go bankrupt and to turn AMC into a success instead. So Adam Aaron was not only offered $1 billion, but he was urged to let AMC go bankrupt, but he chose not to. It says AMC's embattled chief executive Adam Aaron is resisting Apollo's overture and looking to buy time. So not only did Adam Aaron not accept that $1 billion to let AMC go bankrupt, he outright declined the request and aimed to focus on AMC's success instead. And that's why the One Radio show tweeted saying to those who complained and claimed this to be FUD, I suggest you reread this 3-year-old article. He said there were 2 times when Adam Aaron could have walked away from AMC with tons and tons of cash, at the start of the pandemic and in December of 2020 when he was urged into bankruptcy. And that's why the claims Adam Aaron is working with the shorts to screw retail investors over is just outright ridiculous. 2 separate opportunities to walk away with billions of dollars, and he rejected both. And finally, I also thought this tweet was brilliant. I've spoken about a potential partnership between Elon Musk, Ryan Cohen and Adam Aaron before, but this tweet may just seal the deal. Adam Aaron has recently been tweeting the numbers 333, and if you search back into Adam Aaron's tweets, he thinks the number 333 is very, very important. And Elon Musk has currently adjusted his following to ensure that he's only following 333 users. He's currently also being followed by 144 million people, and actually adjusted his followers down from 144.2 million back to just 144 million on the dot. And obviously 144 million shares is the number of shares AMC will have after the reverse split. Elon Musk also subscribes to 87 different users on Twitter, which is the exact same percentage of people that voted for AMC's reverse split and the ape conversion. Now obviously this could just be entirely coincidental, but I do think a partnership between Elon Musk, Ryan Cohen and Adam Aaron would be brilliant. It's something I've spoken about before, and it's something Adam Aaron has even touched on as well. So I wonder if there is a potential deal in progress behind closed doors. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.